Welcome back to Accounting with Madam Mombi. This is the continuation of the direct material cost variances, where initially in part 1 of this video, we looked at the material price variance, material usage variance, and total material cost variance. So in this video today, we are going to look at some of the other advanced variances, like specifically, we are going to look at the material mix variance. Okay, this is a part of the usage variance. It is just that the reason for the variance is because of the usage, but in terms of the mix. So what you're going to be looking at, you are expected, as per the standard, to mix in a certain proportion. Maybe you are making a fertilizer, you require to mix 3 chemicals, and you are supposed to mix them in a certain proportion, which you are calling the standard mix. Then you are going to you go ahead and mix them according to your own actual mix. So you use your own proportions to mix the chemicals. And then eventually there will be a variance. So what this variance is, it is called the material mix variance. That is one of the variances we are going to be looking at. So we are going to look at what is the actual quantity of the materials that was used. So we are going first of all to identify the actual quantity of the materials that was used. By actual quantity, I mean if you are using 3 types of materials, A, B, and C, you get the total that was used of A, you add the total that was used of B, and you add the total that was used of C. 3 chemicals, if they are there, and you're using 3 of them. Then the total quantity that was used, you apportion it according to the standard mix. How it is prescribed in a predetermined way that they should be mixed in a certain proportion. Holding price to be constant. So you are going to multiply by standard price. Then you compare that with the same actual quantity, now in the actual mix that is provided, or the actual mix that was used. You compare that against how it should have been mixed according to the standard, again holding price to be constant. So this is what our material mix variance is going to be all about. And it is one of the variances we are going to look at in this category. We are also going to look at the material yield variance. We are going to look at the material yield variance. So we are going to be comparing the standard yield. How much is the output that is expected from mixing the materials? So what is the standard yield? What is the output that is expected? We are going to compare that with the actual yield. How much is the actual output that came out from the mix? And then you multiply that by the standard cost per unit, where the standard cost per unit is the standard cost as per the standard mix. If you did everything according to the expectation, you mix according to the expectation, you get the standard cost. You divide that by the standard yield. We are going to see this in form of a question, but simply what you are saying, this standard cost per unit is what you are going to get from this. Once you do everything as per the standard, the actual quantity at the standard mix at the standard price, the total of this column is what you're calling here the standard cost of the standard mix. Then you're going to divide that by the standard yield, which you are going to also be computing. So these 2 variances, the material mix and material yield variances, can be computed, but we're going to look at an example. So we're going to look at an example here, where you're told Impact Limited produces and sells a fertilizer known as DAS by mixing 2 components as follows. So the materials that are used to make the fertilizer are material Q and material R. They are supposed to be mixed at a standard ratio of 80% and 20% respectively. So the right mix is 80% of Q and 20% of R to make the fertilizer known as DAS. And it is expected that the standard price per liter of these components, the standard price per liter of Q is shillings 490, and the standard price per liter of R is shillings 140. Further, you are told that a standard loss of 20% is expected. So once you have mixed your proportions, which are going to be adding up, if you add 80% plus 20%, the total is 100%. Out of that 100%, it is expected that 20% is going to be lost. You remember when you mix chemicals or components, there will be evaporation, there will be chemical reactions, there will be all these forms of losses. So it is expected that a loss of 20% is expected. That is okay. Then the following details relate to the month of October 2023, when 350 units of the fertilizer were produced. So during that period when 350 units of the fertilizer were produced, the actual quantity that was purchased was 310 liters of Q and 120 liters of R, the quantity that was purchased. They were purchased at a cost of shillings, total 155,000, and for R, they were purchased at a total cost of 15,600. Again, you are told that the actual quantity that was used, there's a difference between what you purchased and what you used. So the actual quantity that was used was 300 liters of Q and 100 liters of R. So you are required to calculate the following variances. We are going to look at the material price variance, the material mix variance, and the material yield variance. Now, before I go further, let's first of all consider the price variance. We were expecting to buy at a price of shillings 490 for Q, and for R, we are expecting to buy at a price of 140. Those are the standard prices. We can compare that with the actual price. The actual price here, you can find that they purchased 310 liters of Q at shillings 155,000. So if you divide 155,000 divided by 310 liters, if you divide 155,000 divided by 310 liters, you're going to find that that is equal to 500 shillings. So it means that the actual price at which we bought was 500 per liter. It may silently not noted, but it means that we bought at 500 per liter, which is different from what we expected. We expected to buy at 490 per liter. For this, we bought 120 liters at shillings 15,600. Again, if you divide 15,600 divided by 120, you are going to find that we bought at 130 shillings per liter. And we were expecting to buy at shillings 140 per liter. So this information, these first two columns can give you the actual price. And that will help us to get the material price variance, which is the one we are going to begin with. So we are going to first of all do the material price variance, and then when we come to the mix, we are going to come back to the question. So we are going to compute the material price variance. We said it is equals to standard price minus actual price multiplied by the actual quantity purchased. So we have two materials, we have Q and we have R. And we are seeing that the standard price of Q, we have seen is 490. They were expecting to buy at shillings 490. For R, they were expecting to buy at 140. The actual price, as we have said in the discussion, we have seen that they bought at 500 per kg. And for R, they bought at shillings 130 per kg. So multiplied by, not kg but liter. So multiplied by the number of liters that were bought, They bought 310 liters, purchased the actual quantity that was purchased. They bought 310 liters of Q and 120 liters of R. So this is what is going to give us the material price variance. So the material price variance is going to be 3,100 for Q. And this one is going to be adverse or unfavorable. Why? The actual price is more than the standard price. If the actual price was more, that variance is not good for you, it is adverse. Then for the R, the actual price is less. So this is a favorable variance. So then you are going to get the sum of the two. The negative one is bigger, so you end up being that the overall variance is negative. It is adverse. That is how we get the material price variance. If you are new to this video, you can check the previous one to get more details on the material price variance as discussed. So our agenda mostly is to compute the material mix variance and the material yield variance. So let's go back a little bit and look at our question here. Remember, when you are computing the material mix and the material yield variance, you require as the first item is to know the actual quantity that was used, which is given here. This is the actual quantity that was used. They used 300 liters of Q and they used 100 liters of R. This is going to be our starting point by identifying what is the actual quantity that was used. And then we are going to look at how are they supposed to mix. What is the standard mix? They were supposed to mix in the ratio of 80% of Q and 20% of R. So with that in mind, allow me to go back here. With that in mind, allow me to go back here and add another column where we are going to look at the material mix variance. Material mix variance. We said for this variance, it is the actual quantity, not purchased but used, actual quantity used. This time you are not talking about the one that was purchased, you are talking about that one that was used at standard mix, at standard price, or rather holding price to be constant. This you subtract the same actual quantity that was used, actual quantity used, this time at the actual mix. Holding price to be constant. Holding price to be constant. So from our question, the actual quantity that was used, we have said they used Q 300 plus R 100. So the actual quantity that was used was 400 liters were used. That is the actual quantity that was used, is 400 liters. Combined Q and R. So the 400 liters were supposed to be mixed according to the standard mix. They were supposed to be mixed at 80% for Q and 20% for R. So if they followed the prescribed format of mixing the chemicals to get the fertilizer, they were supposed to mix the 400 in the ratio of 80% is to 20%. So this 400 should have been mixed as 300 of Q and sorry, this is 320. 320 for Q. Sorry, this is supposed to be 320 for Q, that is 80%. And 20% is going to be 80, a total of 400. That is the standard mix at the standard price. So you are going to multiply by the standard price. The standard price had been given as 490 and the standard price here had been given as 140. So this is going to give us a mix that should have costed 156,800 and 11,200. So this mix, according to the standard, should be 168,000. That is the appropriate or the standard mix, or that is how they were expected to mix the chemicals. But now, what did they actually do? Let us look at the actual mix. The actual mix was 300 and 100. So actually the same quantity of 400 was mixed at 300 for Q and 100 for R. That is how you are told, that is the actual usage. That is how they were used. So again, holding price to be constant. Holding price to be constant, you multiply by the standard price of 490. And here you multiply by the standard price of 140. So this one gives us 147,000. Forgive me for this, 147,000. And this one gives us 14,000. Which again gives us a total of 161,000. So the actual mix costed 161,000. So the question is, then what is the mix variance? The mix variance is going to be simply the standard. This is the standard, which is given up to this. This is how they were supposed to be mixed. And the actual, which is given by this, the actual mix. So it is going to be 168,000 minus 161,000. So the mix variance is going to be 7,000. The mix variance is going to be 7,000. Now the question is this, whether it is favorable or adverse. The standard mix would have costed 168,000. The actual mix actually costed 161,000. So the actual mix is cheaper. So this variance is favorable. So that variance is favorable. So this is how you get the mix variance. You look at the actual quantity that was used, which we found to be 300 of Q plus 100 of R. So the actual quantity is 400 that was used. You apportion it according to the standard mix, which was expected to be 80% and 20%. Then you hold the price to be constant, so you multiply by the standard price. You get that the standard mix should cost 168,000. You compare that with the actual mix, the same quantity that was used, 300 and 100, holding price to be constant, you multiply by the standard price, you get that the actual mix costed 161,000. Then you less the two figures and you find the material mix variance. So that is it for material mix. Then you look at material yield variance. Material yield variance, which is given by, we said, standard yield minus the actual yield. Minus the actual yield multiplied by the standard cost per unit. So we can start by asking ourselves, what is the standard loss? Remember we said if you mix the actual quantity that was mixed, actual usage of materials, a total of 400, which was given by 300 plus 100. From this, it is expected that there is a standard loss of 20%. Standard loss is 20%. So if the standard loss is 20%, then what is the standard yield? The standard yield is going to be 80%, because 100 minus 20 is 80%. So means the standard yield then is 80%. Once you lose 20%, you are going to be left with 80%. So you multiply that by 400. You find that the standard yield is supposed to be 320. So the liters of fertilizer, the fertilizer that should be produced should be 320 liters. And that is our standard yield, 320. Then the actual yield. In the question, you are told that in the specific month of October, 350 liters were yielded. So the actual yield is the 350 liters that were yielded. I can refer you back to the question just in case. And it is here. You are told a standard loss of 20 is expected, translating to a standard yield of 80%. And the actual quantity in the month of October, there were 350 units of DAS that were produced. So the actual quantity is 350. Then now our biggest question then is, what is the standard cost per unit? And we said that the standard cost per unit, it is going to be given by the standard cost, which we got here. If you do everything according to the standard, this is the standard cost. This is the standard cost. It is expected that if you follow the standard, you mix according to the standard cost should be 168. So the standard cost is 168,000 divided by the standard yield. You are expected to yield 320 if you follow the standard. So this gives us a standard cost of shillings 525. So multiplying that by 525, you are going to get the variance is 15,750. And because this is a yield variance, if the yield is more, then this is favorable because it means you're getting more output than you expected. And that marks the end of the advanced variances, that is material mix and material yield variance. If you found this video to be useful, like, share, and subscribe. Thank you.